Hey everybody, this is Jim at SP500chart.com. It's about 2:30 on Sunday afternoon on the first day of summer. That's June 21st, 2020. I think it's the first day of summer. It might be tomorrow. I don't know. I don't know if it's always the 21st or not, but it is the summer solstice today, the longest day of the year. So I think it's the 21st that it's first day of summer. Anyway, look. Rather than consult astronomical tables, let's look at a chart. After I remind you, the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking here at a 30-minute chart, you see this channel. Here we can actually back out of that just a little bit. Here's the channel we've been in for quite a while. Goes all the way back, really, to the beginning of April. It does not, as of this past week, it does not include anything that was inside this cup and handle. Okay, that's a change that I made this week. And the reason is because the lows that we saw at the first of the week looked like significant lows. I'm convinced this is a significant low. I'm not convinced that this and this right here, the extreme low down just under 2200, or the level that we hit before we broke out over this cup and handle pattern. And there's a little background for that, and it simply has to do with the fact that sometimes bottoming patterns, particularly when there's emotions running high, bottoming patterns sometimes just get so low that you cannot rely upon them to make a trustworthy point in any channel or trend line going forward. A case in point, right here, March 9th, 2009. There is no trend line that starts here. Well, I'll take it back. You could probably, you could pull that one back there. But look at what happened when we got underneath it. It did nothing broke. We just went sideways and consolidated. By the way, a lot of people were saying that this was a rising wedge. And even before we got into 2011, it looked like a rising wedge. And people were saying the S&P is going to go back down and retest 666. And those people were saying that when we were just over 1,000 or around 1,100. And that's when I started doing these videos in hopes of keeping people from making that mistake. At least I thought it was a mistake. I couldn't be sure at the time, but it turned out in retrospect, yes, being short at 1,000 or 1,100 in the S&P was a huge mistake. So, while that one trend line did break, the trend did not. So we were looking at something perhaps similar here, that while, I'll just throw this up here real quick, that while if we go here and here, that trend line broke, but the trend did not. If we go here and here, that trend broke, but the trend did not. If we go here and here, that trend broke, but has the trend. That trend line broke, but has the trend. So all of that to say, I don't know how reliable that can be. Now, I want to be honest with you. We still keep an eye on things like this, and I would encourage you, and as a matter of fact, I'll even leave this line up there I'm just going to keep it real kind of dim, just as a gentle reminder that maybe this time that is a big rising wedge. But we also certainly have a parallel channel that has developed after we got outside of that cup and handle pattern. So, going forward with that in mind, this week was one in which we firmly got out of the area that we were in as we were testing support. Matter of fact, on Monday, we actually got pretty low, but had a nice reversal day. We had follow through on Tuesday, Wednesday, Thursday, and Friday. The one thing that was a little bit of a surprise on Friday was I thought we might have been in a symmetrical triangle pattern here, but what happened? We broke out over that pattern, though not by a technically significant margin, and then we came back down underneath that pattern. So the question, the $64,000 question is, was that a premature breakout? And then we just get underneath that line by about the same margin as a result of basically trading physics. And what I mean by trading physics is for every reaction, there is an opposite and equal reaction. So we get too high, then we get too low, but this still looks to be pretty much the center point. You can even see on Friday, once we got underneath this little midpoint line, we hit it twice and couldn't get over it. Let's see what happens tomorrow, because this has a little bit of an inverted head and shoulders pattern to it. I don't want to speak out of turn here, but that we could be seeing exactly what I just described, and that is we get over the trend line prematurely, and oftentimes gaps will do that, and then we have to get back down as a reaction to that false breakout. We then have a move that is about equal to the downside in relation to the overall pattern. So symmetrical triangle, oops, shouldn't really have been here. So now we got a little price to pay, and we do so later in the day on Friday. So let's see how things start out this week. You'll notice this line right here. This is the extended neckline to that big inverted head and shoulders pattern that the coronavirus scare obliterated. Don't know how important this is, but I'm keeping it on the chart because for over a year it was important. We look at it right there, all the way from roughly the beginning of 2018 through the fall of 2019. So well over a year, over a year and a half. This was an important trend line, and it was the coronavirus scare that took us underneath this line. We have been over it. At times, we were over it right back here during the second week of June, but we didn't hold that position, and it makes sense because, well, now we know that is a line of resistance. So let's see what happens this week with this 4-day consolidation. Let's see, was this a head fake and we're going to break down, or was that just a premature breakout with a opposite and equal reaction to the other side, and now we break out anew? I do not know the answer to that question, but I think this is still, we should still consider this a consolidation. And since it's happening in the middle of this channel, I'm thinking the odds favor an upside move, but obviously we're still in a market that is being heavily driven by news, by politics, by rioting, by all kinds of stuff. Yet the markets have been amazingly resilient, even in the face of COVID-19, defund the police, and just everything that's going on in the world that you would think would take the markets down. The markets seem to be using those things as footholds in that good old wall of worry. So guys, there you have it. The week was a strong one, but we didn't. Once we bounced up off of the 2970s area on the 15th, we just sort of went sideways. So, to me, again, this looks like a flag, a bull flag. But we've got to get a fresh break over this line here. As a matter of fact, I think wrong one. Safety being the better part, discretion being the better part of valor. Let's move that right there. Because that's twice in the week we didn't get over this line. So let's slightly change this pattern. Let's say that maybe this is a little something different, possibly even more of a rectangle. But funny, you don't see rectangles very often anymore. Used to see them, according to John McGee, a lot of rectangles in the 1940s and 1950s as traders would set up these trading zones where they would just flat out manipulate stock. So they'd take a $100 stock, they'd buy it 100, sell it 120, buy it 100, sell it 120, buy it 100, sell it 120. Just do that as long as they could, so you would end up with this very long rectangle. You don't see that very often these days. So anyway, hey, there you have it. There is your weekly review for the week ending June 19th. Thanks for taking time out of your day to watch this. If you're a father, happy Father's Day. And even if you're not, I'll thank you for your very kind support. Take care.